HDFC Bank is down more than 2% and is the top Nifty loser after the latest MSCI rejig indicates that the bank will see an increase in the foreign inclusion factor in 2 tranches in the global standard index.
The industry slides after the management says that they will revisit their EBITDA guidance due to volatility in margin and pressure from China. However, brokerage firms MK and Nuvama, they maintain their bullish stance on the stock. MK issues a buy call while Nuvama raises its target price to 903 rupees a share.
Shares of Marico climb after the company reports manufacturing operations in Bangladesh have resumed at normal scale.
Hindustan Copper is up close to around 3.5% after the company reports a good set of numbers in the first quarter. The margin's near 40% as there's a sharp drop in cost, which aids margin expansion.
Inox Wind zooms nearly 9% after the company has bagged a 51 megawatt equipment supply order from Renew.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Join me as always is Mangalam Balu. As you could see, all the indices are currently trading in the red. The problem today for the Nifty as well as the Nifty Bank is big boy HDFC Bank. The overnight queue coming in from MSCI was not as much as what the bulls expected. So HDFC Bank, well, that's the biggest drag in today's trading session, both on the Nifty as well as the Nifty Bank. Hey, Mangalam.
Take that point, Nigel, and that will also be the stock which will be in focus in the second half of trade because we have the financial services expiry today. And thereafter, we also have, both the Nifty as well as the Nifty Bank expiry tomorrow, largely because on Thursday is a holiday. Nevertheless, we are seeing some traction in a bunch of names, which are moving higher. Titan, for instance, is among the top gainers on the Nifty at the high point. Infosys did well in yesterday's trading session, holding well in the green right now as well. And alongside that, we do have a bunch of other stocks from the broader markets, which, are doing slightly better. So we have Balrampur Chini, it's higher. We had the management join us an hour ago. Alchem Labs is the other one which is doing well. And IGL along with Dixon Tech too is in the green. Apart from all of that, we have a bunch of cash market stocks as well, which are surging. Olectra Green Tech, for instance, the kind of up move that we've seen in Ola Electric. Maybe the street is looking at Olectra Green Tech as well as one of the plays in that space. So that's stock is up around 12%. Inox Wind, after gaining nearly 20% yesterday, another order coming by. That stock sitting with a gain of almost 8%. But while the gaining stocks are kept on one side, we do have a bunch of stocks which are declining, and the number of stocks which are declining are slightly more than the number of stocks which are advancing. So we'll keep an eye out on that. As of now, the frontline indices at the low point of trade.
That's right. I think we should get a contribution chart, Mangalam. That'll tell us a better picture with regard to the way HDFC Bank actually is dragging today's trading session, because it's down close to around 3%. My guess is that close to around 70-80% of actually today's fall on the Nifty will be accounted for HDFC Bank itself. So that should come up for you on the screen as well. But stocks that are doing well, you have Hero MotoCorp that's up 1.5%, Apollo Hospitals as well as higher. The problem is that both these two, they're lighter weights on the index. At some point of time, we'll get that contribution chart as well. But I think, Mangalam, we have a couple of IPOs that listed today. So let's get to a couple of those managements.
Yeah, let's try and get to, the managements of both Unicommerce as well as Brainbees. So just trying to figure out whether the management's connected with us as of now or not, but maybe just shortly we will see that. Just looking at Sun TV once again, Nigel, yesterday the stock was down almost 10-11%. The margin contraction is something that the street did not like, and as a result of which we saw a big decline. And now as well as we speak, Sun TV is down close to around 3.5-4% making this week's cuts itself down to about 15%. Let's see at what point, we get some sort of buying on Sun TV, because you do have those triggers of the IPL, etc., playing out, the IPL team playing out too. But as promised, let's get to the managements of, the IPOs that have now listed, the stocks that have listed. It is online retail software services provider Unicommerce has seen a stellar debut on the exchanges, listing with over 100% premium to its issue price, doubling from its issue price itself. Kunal Balu, who's the promoter and non-executive director of the company, joins in to discuss the company's post-listing plans. Kunal, first up, congratulations. It's been a stellar listing. And, on a day where the markets are slightly wobbly, there have been a fair amount of takers for your IPO as well. But now with this solid listing that has happened, as they say in Superman, right? With great power comes great responsibility. We can say that for you as well. Great market cap comes great responsibility. We've got your numbers for the last 3 financial years. Now we're in the middle of FY25. How has the first half of this financial year been for you in terms of revenue as well as margins? If you could give us a directional sense, and what kind of growth are we likely to see for this year?
Firstly, thank you for having me on, and it's obviously a very humbling moment for all of us and our teams at Unicommerce. These are things you don't plan for or expect, but when they happen, you can only feel grateful. Unicommerce is a market leader in the e-commerce enablement SaaS space. So we serve 3,500 businesses that sell online. These could be digital native brands or digital migrant brands, traditional brands that have decided to grow their businesses online. And just to give you perspective, today India is at 4 to 5 billion e-commerce shipments, and China is at 150 billion e-commerce shipments. And that's the headroom left to grow for e-commerce in India. And given we are more of a picks and shovels company, where we are providing software to run their businesses at the back end, warehouse management software, inventory management software, and similar other softwares, as the volumes in e-commerce grow, we would anticipate that Unicommerce would be an index to that growth. Last 3 years have been good. We've been growing consistently at about a 35% CAGR. Obviously the growth is not consistently 35 every year, because COVID years were high growth years, and then the growth has started tapering out last year, and we saw obviously a slower year last year in the overall e-commerce shipments. On a going forward basis, we anticipate that the e-commerce shipments in India will grow at about 25% a year on a CAGR basis. And historically, Unicommerce has delivered an e-commerce market growth plus growth. But we've also been profitable, given it's a pure software company. We don't do any operations. We don't manage warehouses physically. We manage them virtually using our software. And our software is priced on a per unit basis. So as the volumes grow, the monetization for Unicommerce grows.
All right. Hi, Kunal. First of all, congratulations. Solid listing. It tells you the kind of potential that shareholders see. But now delivery, as my colleague Mangalam said, is going to be crucial. So let's get to a couple of numbers. 25% is your estimate, I think, of the industry. And as you said, you have been delivering industry-leading growth. So should we presume that you will do better than 25% revenue growth for this year? And margins for the past year were close to around 13%. But there'll be an element of operating leverage as well that plays out. So where do you see this margin headed? Mid-teens in the coming year?
Sure. So thanks again. Look, we are only about 4 months into this year. We are seeing a slight upswing in the volumes from last year. However, we are not yet seeing the significant surge in growth we had seen 2-3 years ago. But we are not particularly perturbed about short-term volume growth in e-commerce, because at least the long-term story we are very, very clear is highly intact for e-commerce volume growth in India, which is really what Unicommerce's main engine for growth is. So if, for instance, this year the e-commerce growth is 10%, 12%, 15%, we should ideally be growing faster than that. But to the point of operating leverage, which is a very important one, it's an integral part of this business, because our fixed costs actually don't grow with scale. In fact, our fixed costs as a percentage of our revenue have been dropping. We do anticipate that a significant part of the incremental revenue growth we will see this year, as was the case last year, will grow into the bottom line and ensure that we are continuing to grow our margins. So yes, last year our PAT actually doubled from FY23 to FY24, and our anticipation would be that we would continue to grow the profit even this year.
All right. So Kunal, so far what we've understood of your business and what you've told us as well, it seems like there are 3 major levers to drive your revenue growth. One would be the inherent e-commerce volumes itself. Second would be you adding more clients to your portfolio. And third would be you expanding the scope of services that you give to your clients as well. And obviously the fourth will be the pricing power as well. All these 4 factors driving your revenues going forward. Could you give us a sense of, if, say, the e-commerce industry grows at a certain percentage, how much higher over that can you grow? And if you could give us a sense of the kind of client additions we're targeting, the kind of service expansion that you're targeting, and the price growth as well.
Right, absolutely. So, look, historically we've grown, give or take, about 500 basis points higher than e-commerce volume growth. So, for instance, in FY24, we believe that the volume growth was in the 8, 9, 10% range, and our revenues grew 15% plus in FY24. So, and historically also during COVID, when e-commerce was growing at 30, 35%, we actually grew 50%. But, there were too many extraordinary things about COVID that we don't anticipate that we can beat the market that much on an ongoing basis. We will try, but, obviously it's hard to pull that off again and again. Your levers are actually absolutely well identified. One of the biggest levers for us is obviously e-commerce volume growth, which we mentioned already. But in addition to that, there are many other things, many other levers in this business. One is new products. We've launched 2 new products in the last few months, and we are now in the journey of scaling them up. Because as we are realizing that the e-commerce, these e-commerce brands or brands who are selling on e-commerce are growing in size, the complexity in their businesses is growing very dramatically. And as the complexity grows, they can no longer work on a spreadsheet. They need software. And we ourselves are getting surprised at how quickly some of these businesses are growing and how complicated their businesses are becoming. And so it's really incumbent on our humility and our creativity as a company to go listen to these customers and understand what else do they need in terms of software products that we can build. And once we build a product, we actually go sell it to all our customers, the thousands of customers that we have, because we don't do any custom software, etc. It's a productized setup. We are also obviously in international markets, a lever that you did not mention. We are currently in 6 countries total, mostly in the Middle East and Southeast Asia. We currently have some good customers there, like Landmark Group and others. However, we will anticipate that in the future we want to sign up more customers in these markets.
Right.
Here, obviously the realizations are better, and the product is already built out.
Got it.
So the incremental profit growth from those markets can be significant.
Take that point, Kunal. Once again, congratulations. It's been a great listing. You've drawn open the growth programs for us. The street will now wait on the deliverance of the same as well. That's about Unicommerce. We'll take a short break. In fact, before we take that short break, let's get you an idea for profit coming in from our colleagues at Money Control Pro. Today we have Khushbu Rai Gupta joining in with the stock that she's been tracking.
Today's idea for profit is Emami. The company has reported healthy earnings from 2 consequent quarters, backed by largest presence in the rural areas as compared to the peers. The summer-centric portfolio, including Navratna range and Dermicool, led to high single-digit volume growth in the June quarter due to continued rural demand recovery and favorable weather conditions. In the healthcare category, the growth is expected to improve, and the Zanducare brand should be a winner given Emami's leadership position and an unmatched product efficacy. The management has guided for top-line growth in the high single-digit, led by mid-single-digit volume growth in the coming quarters. We are of the opinion that continued focus on the core portfolio and the scaling up of newly acquired businesses and other premium D2C brand will aid growth and margins in the coming period. The stock is trading at a PE multiple of 35 times FY26 estimated earnings, and given Emami's presence in the niche personal care categories with low penetration makes the stock a long-term investment case.
Okay, all right. Thanks a lot for that. Well, for the time being, we'll slip into a short break. On the other side, we'll get chatting with Supam Maheshwari, who's the MD and CEO of BrainBees Solution, which is FirstCry. Stay with us.
Welcome back. Dips on the mid-cap end have been bought into. Now the mid-cap index has moved mildly into the green. The Nifty too has pared some of its losses, holding above that 24,300 mark. A wee bit of an improvement from the time when we started the show right now. The mid-cap index should come a few. That's seen more green than the other indices. So the mid-cap index has now moved into the green by about 85 odd points. Apart from the broader markets, apart from the big F&O stocks, we have a lot of other stocks from the broader markets doing well too. And one of them stands out is the dairy sector on the whole. So we've seen decent traction come by on names like Dodla Dairy and Parag Milk in yesterday's trading session. Giving it company today is Hatsun Agro. Hatsun Agro is actually the one which was in the red for most part of today's trading session, but now has moved to the high point of trade. And Parag Milk, of course, has increased its gains from what it saw yesterday as well. So 4.5% up move is what we're seeing out there. Apart from that, we're also seeing some traction in CCL products, reported good numbers. So that stock too has moved higher. And Shoppers Stop is the one which also has been seeing some traction. Before we slip into that short break, just pull up the intraday chart of Bikaji and also a monthly chart. There's something up on Bikaji for sure. Every dip is being bought into out there. This week it's up around 6%. This month it's up around 20%. And from the start of this year itself, it's seen a gain of almost 60-odd%. So we'll keep an eye out on this one as we go along too. Take a short break, come back on the other side. We'll get you the management of FirstCry, Brain Solutions. The listing happened today. The management joins us.
Welcome back. Well, Brainbees Solution, which runs India's largest multi-channel mother and baby product retail platform, FirstCry, has also seen a strong debut. It's listed at a 40% premium to its issue price. We have with us Mr. Supam Maheshwari, who's the Managing Director as well as the CEO of Brainbees. Hi, Supam. Good morning and congratulations. Solid listing. Your shareholders will be pleased to see the kind of listing gains that they're seeing. But now it's all on business, right? So let's focus on that. As you've mentioned in the past, the industry is expected to grow by close to around 20%. What kind of growth can you deliver for the company in the coming fiscal? Point number one. Point number two is on margins, you have been doing close to around 7 to 8% margins. When do you see this number headed to double digits?
So you rightly picked up. If you look at our business, Mangalam, we are operating out of a $120 billion TAM. In India, multi-channel is going to be $66 billion by FY29. Yes, the market is only 16% organized, which is growing at a 20% CAGR. Being the largest multi-channel retail shopping destination for mothers, baby and kids, we should be the largest beneficiary. And if you look at our past record, we have grown at a CAGR of 20% plus in our India multi-channel. And we should continue to demonstrate going forward, given the industry itself is growing at that. So that's how I would put it.
Okay, all right.
And we have all the modes that we have created for that.
Yeah, Supam, so we've got it in terms of growth. You're expecting industry to grow 20-25%, and you will be outgrowing in the industry, to extrapolate what you said. But in margins, I'm just noticing it. You're roughly at around 4.5% margins. By when do you get to around 7 to 8% and then to double digits? Give us timelines.
So look, if you look at our overall, you're referring to console margins, if you look at our journey, we were at 1.5% in FY23. We grew to 4.2% in FY24. So that's a meaningful jump that we have taken in just 12 months. And with our global bees business becoming profitable, India multi-channel growing from 5.9% adjusted EBITDA in FY22 to 8.8% in FY24. That's also a very meaningful jump. And likewise, our international business has been able to improve our profile in terms of the negative EBITDA, because just the journey that we have started 2 years back in Saudi. With all of these businesses that we are demonstrating, and our small business on preschool also delivers close to around 18% adjusted EBITDA, close to which was negative in FY23. So with all of these four segments delivering meaningful expansion on bottom line, and we should be able to demonstrate at a console level as well going forward.
All right. Supam, I just wanted to know one thing from you. You have been raising these funds to add your own store network. Now, typically, a large part of your store network is franchised. With your own stores, you will have better margins, right? Could you tell us the differential between margins that you get from the franchise business from your own stores, and how is this mix likely to change, say, 1 to 2 years from now, once all your 350 stores are on stream?
So today we have this ratio of 1,000 plus stores into 60-40. 60% is franchisee owned, franchisee operated. We have been running with almost close to hundreds of franchisees, business partners that have trusted us for so many years and even more than a decade, some of them. So we will continue to build on that, while our journey of Coco, which is company owned, company operated, started somewhere close to FY29 when the percentage ratio was less than 10% of our COCO stores in FY21, and in FY24 it has become close to around 40%. So over a period of time, we will, while as per our RHP, if you will read, we are going to open 350 COCO stores in next 2 years, while our journey for FOFO also will continue to grow along as we have done in past. So the ratio will not materially change, but it will keep getting in the similar direction as what we have demonstrated in the last 3 to 4 years.
Okay, all right. Supam, what is the expected investment and growth in the preschool business from here on?
So there is no investment in that business. It's an asset-light business, Mangalam. It is business partners that we work with. We have already 200 plus preschools in the country. This business is started very, post-COVID incidentally, because in the COVID everything was shut. So in last 2.5 years, today we have 200 plus preschools. Last year we grew 50% year on year. If you look at our FY24 over FY23, and from a profitability standpoint, FY23 was negative, and FY24 we have already delivered 17.5% EBITDA in the preschool business. So this will only continue to compound as we grow along, because it's a totally asset-light business. There is no investment per se on any capex or opex incrementally from our side.
All right, one was wondering what the synergies between this and your core business would be out there. But thanks for explaining. Short on time, today was a day for your company shareholders to celebrate with the 40% uptick that we've seen on the issue price. But, we'll speak to you once you report your results for the first half of this year and thereafter get better direction on the numbers of the company. Thank you so much for joining in, Supam. That was the management of Brainbees Solutions, another stock that was a big lister in today's trading session. Take a short break, come back. On the other side, we have the team of Trading Gar taking forward the market action.